Happy New Year! And where else would you rather bring in the new year of 2022 than in Hawaii? That's where I am in Maui this week as part of the team that's bringing together the PGA Tour Live and ESPN Plus. Going to have 4 streams in a couple of weeks starting out in California. Golf all the time. Dreams do come true. And by the way, 2022, we're counting on you. Barney Allery not going to be able to join us this week on Breaking Even because we had some technical difficulties out here in Hawaii. Even in paradise, there are problems. But fortunately, we spent a lot of time with the newest permanent member of the Breaking Even family and Risk Reward bigger family of Jonathan Coachman. He's going to be with us now almost every week, laying down his picks and his props, not only on the golf, but all sports. Looking forward to hearing what he has to say just week to week. But really, this week is an interesting one because the Century Tournament of Champions is for only winners from the past year. And it's an interesting, intriguing golf course, this Kapalua, this plantation course. And he also digs deep into the college national championship football game between Alabama and the University of Georgia. And if you haven't seen it, Georgia is actually favored right now, which is still pretty shocking. But Coach, he's holding a ticket that he made before the season started for one of these teams, and he'll tell you why. Also, if you've been paying attention to the markets, they didn't totally fall apart today, but they're starting to crumble. And Guy, Adami, Dan, Nathan, they joined us. And if you were paying attention last week and even the week before that, they gave us a game plan and a blueprint of what they thought was going to happen and how to manage your risk. They dig a little deeper in this episode of Breaking Even, find out, do they double down or do they adjust their plans a little bit? Let's dig right in and get straight to our conversation with the coach.
Breaking Even is brought to you by Risk Reversal Media. You can find us at riskreversal.com and check out our podcast, On the Tape. Each week, Guy Adami, Danny Moses, and me, Dan Nathan, discuss the biggest market-moving headlines and chat with some of the most influential people on Wall Street, all in an effort to help our listeners make smarter investment decisions. So follow us On the Tape in your preferred podcast store.
Time for the PGA Tour to get started in 2022. We do it in Maui. Fortunately, that's where I am. Going to be in Honolulu next week. And the PGA Tour, as it kicks off, there are only 39 players in this field out in the Century Tournament of Champions. And of course, there's the national championship game that's coming up on Monday in college football. NFL playoffs are imminent. And so when we start talking about who you might want to put some wagers on, we bring in our guy from CBS Sportsline, Jonathan Coachman, the coach. How are we, man? Happy New Year.
Happy New Year to you, too. I've got to admit, I'm a little bit jealous of you, Ned, that you're out on the islands. And I'm still in Orange County, so don't feel too bad for me. But I'm sure things are nice out there. So Happy New Year, and I'm ready to get this thing rolling again.
Yeah, 99% of the time we're jealous of you. So I'm going to really enjoy this 1% that you might be a little envious of me.
Fair enough. Fair enough.
When you look at some of the lines for this tournament, where do your eyeballs fall?
I listened to a podcast that Brendan Steele did earlier in 2021, and it really changed how I go about betting, and it really limited where I'm going to bet moving forward. And here's what he said. He said that as pros, there are certain guys that are very, very consistent. He said if you bet the same guys every single week, he said you're not going to win every week, but you will win a lot more than you lose. Brendan Steele said, I don't understand people that week to week change their golfers based off of course or based off of this or based off of that. He goes, these players are top 10, top 15, top 20 for a reason. So with that being said, Ned, I am all over this year. Justin Thomas, Colin Morikawa, and Jon Rahm. But this week, a lot of the lines at the books have Justin Thomas, a 2-time champion at this event, and Jon Rahm going head-to-head. So I'm taking JT over Rahm for the simple fact that Rahm just hasn't played in a while. JT played the entire month of December. He played the hero. He played the father and son. And so he hasn't really taken a break. So I'll take the guy who's played well and consistently and a lot over the guy who hasn't. And also I like Colin Morikawa. Do you know, here's a crazy stat, that if you would have bet $100 on every tournament that Colin Morikawa has played since he came onto the PGA Tour 2.5 years ago, you would be up over $11,000 right now. If you just blindly bet $100 every single tournament on him to win, you'd be up over $11,000. That's how consistent Colin Morikawa has been. So those are three guys that I'm looking at not only this week, but also for the entire year. And this tournament has really upped their star power the last few years now that JT and Rahm and all the guys who win now actually go back there and play, because Tiger, Phil, none of those guys ever did it. But now the top players are, and I think that's pretty cool.
I remember you talking about Brendan Steele. I specifically remember that podcast and you mentioning it. Really cool stat about Morikawa, kind of Hogan-esque. Just keep betting on the man, and eventually you're going to win some money. I do wonder, though, about this golf course. A guy like Patrick Reed, who has a terrific track record. And then on the Jon Rahm, Justin Thomas, I'm just going to play devil's advocate. Remember, Rahm took a good 6 weeks off before the race to Dubai in the final tournament. This was 2 years ago. Ended up winning the whole thing and won that week. So is he a guy who you think maybe can take time off and then comes right back and is playing really at a high level?
Oh, there's no question about it. It's not about Jon Rahm not playing well. This is about listening to what Brendan Steele said, because he could come out and win this week, Ned, and we could say, all right, we lost betting on Justin Thomas this week, but are we going to lose on Justin Thomas over the entire 2022? The answer is probably no. So I have to go with what I plan to do all year. And also the upside is you're getting much better odds going against Jon Rahm than you would if JT was a tournament matchup against, I don't know, Spieth. He's only like minus 110, minus 113. Those are fantastic odds for JT, who takes every single tournament seriously. He's won here twice, and you don't have to be a long hitter. You don't have to be a short hitter. It is over 7,500 yards, but I saw a quote from Patrick Reed, and the reason he does so well at places like this is that he doesn't like to play courses that you can take your driving range swing and take it to the golf course. He wants a golf course where you have to be creative, where you have slopes and you have uneven lies. And he thinks that separates himself from a lot of the other players on tour. And he's right. And so I'm bullish on Patrick Reed this week. But the three guys that I love are Justin Thomas, Colin Morikawa, and also let's throw in Xander Schauffele, because let's not forget, he literally handed Justin Thomas one of his wins here, because he three-putted on the 18th green to force a playoff instead of winning by a shot when he should have. So he's very good on this golf course as well.
Yeah, I remember he shot that 62 en route to victory here a couple of years ago, and you mentioned it's a par 73. It was a 62 with a bogey on the first hole, and then shot 62 from there. Patrick Reed's an interesting case study here because he obviously has a terrific track record. He's got to win. He's lost in a playoff. But the thing that astonishes me about him is he really doesn't hit that many greens here. And the greens are enormous, absolutely huge. He was like 62% one putt. Let that sink in for a second. 62% of the time he one putted here, almost winning last year. If you're not hitting greens here, it strikes me as a place that guy doesn't hunt for very long.
His short game is so spectacular that he can pull this off. But the average percentage of greens hit in regulation for almost every single pro on this course is above 70%. So to your point, he's well under that. But his short game is so good, he can get it within 8 feet or closer, and then that adds to your one-putt statistics. But keep this in mind for people who are thinking about top 20s, top 10s, or specific players like a Patrick Reed. 5 of the last 6 winners on this course at this event have been at least minus 22 or higher, or lower, depending on how you look at it. And so you have to have your game from the start. That's why I'm so bullish on guys like Justin Thomas and guys that are going to come out on Thursday, because you can't give away 5 or 6 shots, Ned, on Thursday and then expect to come back on this type of a golf course. It's a golf course that, quite frankly, players love to play, but the top players don't particularly like it for their chances, because they know if they have one bad day, they're not going to win. And they would rather play a hard course, shoot 174, still have a chance to win, and get a T18 at minus 20. I heard Pat Perez do an interview recently, and he said, we don't play the hardest golf courses in the world. We just don't. And I thought it was interesting for a PGA Tour pro to actually admit that, but it's the truth.
This golf course can play tough if the wind gets going. Core Crenshaw came in and they revamped it a couple of years ago, and they basically said it had gotten too soft. This is a golf course that's meant to play firm and fast, and the ball is supposed to run, say, 50 yards on some hole, 150 yards on some other holes. Around the greens, that firmness makes it more difficult to get it close, to bounce it up. And the course had become so soft, it was target practice. So scores, when they initially revamped it, dropped down 14 under one, but then we started to see it peak up a little bit next year. In terms of a over under on winning score, do they typically have a line for something like that, or is it just you can make your own prop bets along the way?
Rarely do you have that. Sometimes you will. Some sports books do. And usually it's a range bet. So you can be like, here's your odds if the winning bet is 15 or higher or 20, and usually they're pretty spot on because they have the historical data that's going to tell you. Now, where it could change, Ned, is that the last 2 years, for the first time ever, they expanded the field to include anybody who made it to Eastlake in the Tour Championship. They would be eligible to play in this event. So you go from 20-some players to now you said 39 at the start, but Cameron Champ tested positive for COVID. So he's out.
That's
so
right.
We're going to have 38 players teeing it up on Thursday as opposed to 39. But that's still significantly more than what we've had in years past. So that's going to mean players have to play better. So I think the scores will be lower because they know they've got to beat more top guys to get that trophy.
I hate that for Cameron Champ. This is the kind of golf course where if he really got rolling, whether he won or not, it'd be so much fun to watch him uncork some drives and just watch the ball go 430
Well, who
yards.
could forget DJ 2 or 3 years ago? It nearly had a hole-in-one on the par 4, and Brandel Chambly called it the greatest shot he's ever seen. And it was amazing to watch over and over and over because the Golf Channel played it 1,000 times.
They're still playing it. It is worth replay, that's for sure. Okay, so I know you hate doing this. I'm going to try to pin you down, and then we're going to move on to either the NCAA championship in football or maybe some NFL. But who do you like to win this week? And I know this is an impossible endeavor.
This week is not as impossible as a normal week because a normal week you've got 150-some players or at least 125 players on every single week. That makes it much more difficult. I think JT wins this week. I would normally never, and I'll repeat, never tell somebody to bet a player whose odds are less than 10 to 1 or plus 1,000. His is around plus 800 or plus 900. But that translates, Ned, in a normal field to about plus 1,500 to plus 2,000. So I'll take those odds because you can bet a little bit more than I normally would on a winner because I've only got to beat 37 other guys and not 155 other guys. So I'll take JT a little sprinkle. I'll take Xander at plus 1,200 a little sprinkle, and then Colin Morikawa is around that same number. But we mentioned the Morikawa stat. That's going to be very, very difficult to duplicate because a lot of those wins, he was at plus 3,000, plus 4,000. The books have gotten smart. And you'll probably never see him, other than maybe a major when they have to spread the top players out. You'll probably never see Colin Morikawa again at anything north of plus 2,000, probably, because that's kind of the baseline and below for the really top players in the world.
I like those picks. I think that picking usual suspects here, and to your point of that's how you make money. Don't stray too far away unless you can get some crazy good odds, and then don't bet big.
It's kind of like betting on a bad football team. At Sportsline, we do a big NFL mega preview every Tuesday. And we were talking about it on Tuesday that there's a lot of games this week that bad teams are getting a lot of points. It could be lucrative or it could be very inviting to do that. But there's a reason a team only has 1 win or 2 wins in an NFL season because they're a bad team. Why would you bet on a player week after week? Because their odds are so high. There's a reason their odds are so high. I think the highest odds I've ever hit, Ned, are plus 4,500. I successfully picked the winner of the Houston Open when Alonto Griffin won a couple of years ago. But that's the highest I've ever hit. And that's 45 to 1. That's plus 4,500. So there's a reason these guys have high odds. So it's not a money-making venture to do that week in and week out and bet on multiple guys to win who have really high odds.
How in the world did you pick Alonto Griffin in Houston?
The numbers looked right. The way I pick winners, and I'm on a show where I have to pick a winner, but that one I actually bet on. But to bet on a winner, I rarely do it. My bread and butter is head-to-head matchups. For some reason, that particular week, I looked at it. He was playing well. He had really good finishes leading up to that. And that's another thing that people need to keep an eye on. If you really want to make money, you got to do your homework. Look at recent events. Look at recent performances. Not necessarily where they played at, but how they hit their strokes gained stats. Because most pros won't have more than one bad day in a tournament. They might have a 74 or 75, but most top pros will have 3 out of 4 good days. And so I'll take that, but you got to have money management. And you've got to be able to have your bankroll last from Thursday through Sunday. So you got to be very careful, and you got to do your homework.
Speaking of head-to-head, how are you betting this NCAA national championship in football, Alabama versus the Georgia
It's
Bulldogs?
very, very easy for me. Back on our big college football mega preview in August, we picked Alabama to win it all. And at the time, the odds were 2.5 to 1, something like that. I've been sitting on a futures ticket, is what we call it in sports betting, for about 4 months on Alabama. So I'm going Alabama. They're also getting 3, which is crazy to me
Crazy.
because just a month ago, they beat the tar out of the Georgia Bulldogs. But the books say you can't look at trends. You can't look at previous performances. Why not? It's the same team. It's the same quarterbacks. And the only thing is that Alabama will not have one of their dynamic receivers who tore his ACL in that game in Atlanta against Georgia. That's the only difference. So I'm going to take Alabama. I'm going to take the points. The other thing I would think about doing is teasing this game with something else. And what a teaser is you add 6 points to your side, but you got to hit both winners. So I would take Alabama. You add 6. Now, Ned, what are you getting? You're getting 9 points. And you could tease that with a game in the NFL. I would do another football game. I wouldn't do it with a basketball game. But you could do Chiefs on Saturday and take them to +3 against the Broncos or whatever it is. And that's a great way to get really, really good value. And I think that's how, if people are a little precarious as to the +3, put them in a teaser and get them at +9.
The +3 is mind-boggling. I mean, Vegas gets it right most of the time, but that is absolutely head-scratching.
It's going to be closer to pick 'em by the time, because a lot of people don't like betting in advance because it's hard to watch your money just sit in your account and do nothing for a week, because most people bet every single day. So that's another thing. You've got to bet the number. You've got to bet that game right now, because by Monday, that +3 will be gone.
Totally gone. Let me switch gears on you and ask you a more philosophical question that isn't gambling based, but you see a lot of these guys opting out of these bowl games. I think as a professional athlete, obviously these guys are amateurs. I'm a professional. I'm opting out. Unless I'm playing for the national championship, I'm opting out if I know I'm going to be a high level draft pick, even if I take insurance, even if the university insures me. I'm curious on your thoughts.
Here's where I stand, because a lot of people just say that blanket statement. Oh, if I was going to go to the NFL, I would sit out. Really? Let me give people a little education on what truly these players are facing. The top 24 players, that's it, top 24, are the only ones that have a full 4-year guaranteed contract in the NFL. The last 8 picks don't even have it. They only have 3 years. If you're a second-round pick or higher, there are no guarantees. There are no guarantees. So why would you not want to? If you're a top player that's a second-round pick or later, because there's been a lot of players that have backed out that are going to be 3rd, 4th, 5th-round picks. It's not that much money, Ned. It's more than most people make, but it's not worth sitting out a game that you can show people, and most bowl games have the entire stage to themselves. If you're playing for a smaller school and you're not on national TV all year, why wouldn't you take a chance to be on ESPN or Fox or CBS or NBC to have the whole world see how good you are? So I think it's ridiculous. I think that Kirk Herbstreit took a lot of flack for saying they didn't love the game. I wouldn't go that far. But I do think a lot of time these agents get in these players' ears and they make them believe that they're better than they are, and they don't have to prove themselves until they get to the combine. Well, guess what, Ned? At the combine, all you're doing is running the 40, and you're running shuttle drills, and you're just throwing the football. You're not in a game. Plus, at the same time, if you talk to any 40-year-old or older right now and you said, hey, 25 years ago, what would you have done to play in 3 or 4 bowl games? Each one would tell you, I would do it in a heartbeat. Because that's the reward. They're fun. I get to travel. It's my teammates. I can't get it back. So all these players are like, I'm going to protect my future. Well, it's about memories too. And they're throwing not that much money out the window just to say, I'm protecting myself. That's where I don't agree with it. But I do agree with it if you're a top 24 pick, or if you're like Pickett from Pittsburgh and you're going to be arguably the first or second quarterback taken, because then you're talking 4 years, 24, 25 million. Now we're talking.
I agree with you on that. To clarify my stance is if you're going to be a first-round draft pick, a high draft pick, in my mind, it's justifiable that you sit out. Totally agree with you, though, from the smaller school and guys who are on that bubble who you really can make a positive impact. You're not going to hurt your draft selection if you go out and don't have a big game or you have a poor game. But I do think that there are some players out there who you get hurt and you're going to cost yourself millions and millions of dollars. They take a lot of heat, and I just don't think it's justified. But I agree with you that the lower-level guys, as you're saying, past 24, second round and beyond, you go ahead and showcase yourself.
One other thing that people are kind of glossing over that I don't quite understand is if you ask a normal sports fan, Who won the national championship in 2007, 2008, 2009?
No
Can
idea.
they tell you? No. So why is the college football playoff so much more important to these guys than a normal bowl game? Because nobody's going to remember. You might be able to wear a ring on your finger for the rest of your life, but nobody that you think cares is going to care. I'm in my 40s, and for my 20s and 30s, I cared about everything because I thought other people did. They didn't. And I'm so much happier now because I realize nobody cares. They might like me. They may care about me as an individual. They don't care about my accomplishments. It's about me, and it's about my memories. And that's why people are, oh, yeah, if they're in the playoffs. To me, there's no difference. There is no difference because you're talking about I'm protecting my future. Well, no, you're not. It's either you sit out or you play to me. And also, there are big-time payouts for these bowl games. Big time. So these teams that didn't even get to play because of COVID, that didn't handle their business, and yes, I said it, I have no sympathy for teams that had to sit out because of COVID. And the reason I say that is because it's avoidable. People have tested me on this, and all I say is this. Seattle Seahawks, 2020. 0 COVID positive tests for their entire football team for the entire year. If you handle your business, you can do it. But most teams this year, because we've gotten away from thinking the pandemic is over, they're not handling their business. And they're going out without a mask on. They're going out in big groups of people. It drove me nuts last week, Ned. I saw Patrick Mahomes, my quarterback, and Travis Kelce at the game in Texas, one of the playoff games, no mask on, sitting with their girls, other people within 3 to 5 feet of them. And you're in the playoff race for the NFL. What are you doing? What are you doing? I don't understand it.
Have to handle your business. And a man who always handles his business, Jonathan Coachman at The Coach Rules, CBS Sportsline, and now with us here on Breaking Even and Risk Reversal. Coach, always appreciate you.
My man, I'll see you every single week. I'm pumped to get this season back started, and I'm pumped to be on with you every single week. Thanks, pal.
You looking for a vacation? Maybe somewhere you haven't been before, somewhere off the beaten path? Consider Mississippi. You can jump on their website, visitmississippi.org. They had the state fair going on just a couple of weeks ago. They had the PGA Tour in Jackson, Mississippi, the Sanderson Farms Championship. Cruising the Coast, the best automobile show in the country. Deion Sanders, Jackson State. They had 52,000 fans turn up last week at the Jackson State football game. There's so much to do in Mississippi. You can hit the coast. You can gamble a little bit, bet on the sports book, play golf. If you love music, the Grammy Museum, just check it out. Visit Mississippi.org. Happy New Year. Hope you made a little money over the past months here on Breaking Even. Well, the guys who have helped us do that, Dan Nathan, Guy Adami, they join us. And gentlemen, first of all, Happy New Year to you. Hope you brought it in style, which in this COVID era means you did nothing, means you were asleep by 9 o'clock, all by yourself.
Happy New Year. Let's get the pleasantries out of the way. How is it that I'm sitting in the ice-cold, frigid Northeast, and you're in, where are you, in Maui? What are you doing right? And more importantly, what am I doing wrong? Help me out here, Ned Michaels.
Aloha. Even in Nashville, Tennessee, there's a couple of inches of snow on the ground, but not out here. Just sand. And the Century Tournament of Champions, the first PGA Tour event of 2022, kicks off. I am fortunate enough to be doing the coverage with PGA Tour and ESPN Plus this week. And just to rub it in a little bit, Guy, next week in Honolulu as well. You're welcome.
Dude, so you're staying out there. You're not flying from Hawaii to Nashville, but you're staying out there. I mean, this is like a 2-week tour. It's like Gilligan's Island stuff going on.
Yeah, it'll be 3 weeks by the time it's all said and done, 18 days. But I'll be thinking of you.
So good.
Last week, we talked about how these high-growth tech names were starting to get crushed, and the breadth and all these big words that you all were using that you explained pretty well. I got 2 questions for this episode. I want to talk about this ARK ETF, this Kathy Wood, who was really the golden child there for a while, but now everything seems to be turning. So let's talk about that. And then, Dan Nathan, your call on buying puts on the XLK. From last week to this week, it's up roughly 15, 20%, depending on where you purchase those puts. And I'm curious How do you know when to get out?
Yeah, so let's tackle this tech, what's going on there, because it really is a bifurcated market. We've talked about this on Breaking Even over the last few months or so, where these major indices that we quote, we talk about on CNBC, a lot of investors are drawn to how they close on a particular day, up or down, that sort of thing. So the S&P 500 is a group of 500 stocks, but it really is predominantly made up now. If you think of the biggest weighted stocks are tech stocks. Tech is eating the S&P 500. Apple at its highs the other day when it ticked $3 trillion in market cap, there's never been a $3 trillion market cap company, was nearly 7% of the weight of the entire S&P 500. That is, again, an index of 500 stocks. 5 stocks, all tech, make up nearly 25%, a quarter of the weight. So that's why we keep bringing that up. On the flip side, those stocks that I just mentioned have performed fantastically. They've massively outperformed, and they're basically the reason for most of the gains over the last 6 months in the S&P 500. On the flip side of that, you have a scenario where you have a lot of smaller stocks, high growth, very innovative stocks. You just mentioned Cathie Wood's ARK Innovation ETF that has a lot of these names. They trade at multiples, at valuations that are really hard to justify, but they've been getting killed. So you have the big ones that keep going higher, driving the performance of the major indices. And then you have the smaller ones, the so-called pandemic winners, whether it was Zoom or Peloton or Chegg or Teladoc or Square or PayPal. I mean, the list goes on and on. Some of those are bigger than the others. They are getting absolutely, as Guy would say, bludgeoned right now. And so the XLK, which is ETF that tracks some of the biggest tech stocks, was that sooner or later, my idea was that the big ones were going to follow suit. We're starting to see that right now, Ned. Microsoft, I see, is down 2% on the day. We're taping this on Wednesday afternoon. Salesforce, a big SaaS name, is down 5%. The list goes on and on. Adobe's down 4%. A lot of software stocks really heavily hit so far this year. And a lot of that has to do with the fact of interest rates are going higher and people willing to pay less high of a multiple for some of these growth names that are seeing their growth decelerate.
Some of these companies are big name companies who presumably have, as you were saying, this growth potential. Square and PayPal come to mind. But you look back at the dot-com bubble when it burst, there were a lot of such companies that never recovered. Is this a similar trend, or do you think these companies eventually can bounce back?
That's a great question, Ed. I think there absolutely be companies that won't recover. Listen, I think Peloton isn't going anywhere, but are they going to recover to the level that we saw at their peak? Absolutely not. And some names like Teladoc, which people are talking about, people were saying that's the next great thing in medicine 9 months ago. You see how quickly these things become commoditized and people realize the business models are flawed. And that is a replay of some of the things we saw 21 years or so ago, and it's happening right before our eyes. And you make a great point. These are not small, irrelevant companies. These are companies with market caps anywhere from 30 to $100 billion. So we're not talking about small cap biotech names. We're talking about large corporations. And I think you're right in saying a lot of these companies will not recover.
A couple of the calls that you all have made over the past, I guess it's been probably 6 months now, but one of them that comes to mind is Carvana. And I know Danny Moses was big time onto this and some of the loaning issues that they were having. Does this play at all? I mean, they were almost claiming that they were a tech company. Is this completely separate, or somehow is all this intertwined?
We've been talking about it. Let's say Guy and I on Fast Money, we did a segment the other night where we were just looking at some of the performance of some names that you would consider that were business models made for a pandemic, made for the acceleration of certain trends. So we put Carvana up against AutoNation. AutoNation is the largest auto dealer in the country, and half of their sales are initiated online, but it trades at a fraction of the multiple as Carvana. And Carvana has got a much bigger market cap despite having much fewer revenues. So in the run-up of Carvana, a lot of investors were willing to place a whole bunch of assumptions based on their growth and how much it was going to be digital and how high margin it was versus a dealer like AutoNation, which still has a heavy investment in real estate and the whole old model, that sort of thing. So in every sector you could look at, and we did this, I guess, Intel is up 4% right now as I'm speaking. NVIDIA, which was up 130% last year, is down 4%. So you can see these sorts of setups where investors are looking for value right now, and they're selling high valuation growth. And I think those sorts of pairs are really interesting to continue to watch to see how this all shakes out over the next few weeks or possibly months.
And Ned, I encourage you while you're out there in Maui or Honolulu or Waikiki, wherever you are, to Google the name Ernie Garcia, the CEO of Carvana. we put a thing on Twitter earlier today where he's effectively cashed out of a lot of his stock as that stock was headed higher. Now we're looking at a stock in Carvana just north of $200, trading at a lows we haven't seen since the fall of 2020 or thereabouts. So a lot of interesting things. And Danny's pointed it out. Danny Moses, you're pointing it out now. There are a lot of stories out there that people loved 6 months ago that now are falling under the microscope, and people are starting to realize, hey, wait a second, maybe these names aren't all they're cracked up to be.
Well, if they've been listening to On the Tape, they would have known this a long time ago. They would have not only not purchased this stock, they may have gone the other direction. You mentioned commodity, Adami.
Are we going to go down the OIH world? Because as we sit here right now, I think it's north of 205. And the last time we talked, I think it was straddling 180 or thereabouts.
It might have been 182 and change because that's when I sold a lot of stuff.
There you go. There you go. No, look, can I tell you something, Ned? The energy trade is absolutely as volatile as you would imagine that it is. And that OIH, which has vacillated between 170 and 225 a number of times over the last year or so, now seems to be back up on the upswing and probably headed to 225. But you did nothing wrong. When positions become painful and when they basically impede your ability to sleep at night, that's when you know you have to pull the ripcord. So there's no looking back. I will say this, though, and I think Dan will take the other side, and he's probably going to wind up being correct. I still think oil is going to be a huge story as we get into 2022, and I think oil is going significantly higher, which is why I like the OIH. Now, technically, it doesn't look particularly strong, and I think you can make the argument with rates going higher and the dollar going higher, that's going to be a headwind for crude oil, but we'll see.
I guess my 2 cents, and I think Guy is right from a risk management standpoint. When you own something and it starts out as a trade, but then it turns into an investment and you're kind of looking for any piece of advice you can get on what to do with it, you're probably the right thing to do is move your feet, is at very least clip a portion of the position or get out altogether, get a clear head and think about it, because we just don't want to become married to positions that maybe we didn't have a ton of conviction when we started it, but as it goes lower, if it's a long, then we get more conviction just because it's lower. Well, that's not a great idea. About crude oil, Guy's right to play it through the OIH because that's the beta trade. What I don't like to see is this, Ned, we are 3 trading days into the year, and look at the way investors have piled into energy-related names, piled into some banks, piled into some industrials. They literally, some of these things have gone up 10% in a straight line. To me, that is really a function of rebalancing, repositioning, and I don't really see those sorts of things as something that you want to be buying on the second or third day up that's gone up in a straight line. It just seems like, unfortunately, the trade has been missed. Look for a better entry point would be my take on that one.
Well, unfortunately, I bought it low and it started to climb all the way into the 220s and kind of trimmed along the way. And so it's been an interesting learning experience, learning both sides of what could be positively and negatively. So I will continue to ask about the OIH, much to your chagrin, I'm sure, both of you. All right, last question. You kind of answered it, but I want to pin you down a little bit more clearly on how you define when you, for example, buy a put in the XLK and it's up 15 or 20%. How do you define when it's time to get out? Because the folks that I've talked to through the podcast, Breaking Even, online and in person, that always seems to be their biggest question of, okay, how do I know when it's time to get out?
Just, for anybody who's listening, I do a weekly with Fidelity Investments called In the Money, and we talk about a lot of these very issues. We talk about a couple trade ideas each week, and then we talk about how to manage them. And I'll just tell you this. So there's 2 ways to think about when you enter an options trade. I always have some sort of idea of where I might start to take profits. Okay. So if I'm buying a call, and that means I want the underlying to go higher, where might I take a profit on that call? I also think about it to the downside, just because let's just say I paid $1 for a call and then the stock goes lower. I am risking that whole dollar, but I don't have to wait till the dollar goes away. I always like to use a mental stop on the downside, about 50% of the premium that I paid for that option on a directional basis. Okay. So on a winner, I might think, what am I looking for? Was I targeting a technical move to a certain level? I'm looking at the XLK, and over the last month and a half or so, I see 2 lows. One was higher than the next, and that's pretty constructive. So the ETF has been in this uptrend over the last few months, and the lows keep getting higher. Well, that's kind of bullish, and the highs keep getting higher. It's made 3 new highs over the last few months or so. So here I might look, let's say you got that thing towards the recent highs, the recent high, Ned, late last month, 177 in the XLK. We're trading at 172 right now. If I were to see a move back, let's say below 170, but above that prior low, which came in December, like 20th or something like that, around 164 or so, that's where I might take a profit in that thing. I'm not looking for it to make a new low. I'm also looking at, okay, let's say I paid $1 for it. Maybe it's trading at 2. Maybe I take half the position off and I play with the house's money, if that makes sense.
That's perfect. That's clean, and that's exactly what we wanted. I know you all need to run, so I will say thank you and aloha.
Enjoy, man. Happy New Year, brother. Enjoy the family down there and enjoy your work. We'll be watching on ESPN+.
Later, Ned.
Thanks, guys.
Thanks for listening to Breaking Even with me, Ned Michaels. If you like what you heard, make sure you hit follow in the podcast store and leave us a review. It helps people find our show. Follow us on Twitter at Breaking Even Pod, or you can also find me at Ned Michaels. And remember, we'll be back next Thursday for more Breaking Even, which is brought to you by Visit Mississippi. Jump online, visit Mississippi.org. See everything that's going on down there.